The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 17th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is tossing at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here, but even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Well, you can feel free to pick it up, but you can't dial into me. What you can do, though, is pick up those fingers and send me an email. Send that off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then anything and every ping will do. So let's go ahead and get this show started on Fabulous Friday. Of course, this is Tiger Financial News Network. We've got a rally going on inside the U.S. markets out here. You've got the Dow that's up 415 points. S&P's up 66, 349 for the NASDAQ, 13 for the Russell. The transports are down 95 points. Semis are up 125. The NASDAQ Composite, 305 the upside. New York Stock Exchange is up a buck. Gold, silver, the XAU is up a buck. About 0.75%. You got the spot VIX that's trading lower below its 50-day exponential moving to average. It is which provides buyers with the edge out there. Gold's now up $1.70. Silver's down 52 cents. Light sweet crude off 60 pennies. Natural gas is off 27 cents. We'll have to look at that. Copper is off 7 pennies. That's got a TD9 count top out there. 30-year Treasury is up 3 ticks. And what else do we see out here? Not really much for us to report on this screen. So let's move from this screen and go take a look at the daily equity future contracts. Let's start there. We'll see the ES Mini, the NQ. That's not where we wanted to start. Not that we can't start there. We wanted to start on this tab right here. Take a look at where we're at from a daily standpoint. As I had mentioned, if you caught the 11 a.m. update, what you're going to see out here for all of the daily contracts is a series of higher lows out there. If that's not the message of a bull market, at least in this leg as we speak right now, then Stevie doesn't know a gosh darn thing out there. So all higher lows since the rally that began on the trading day of January the 13th out there. Now, in the case of the ES Mini, it is trading above the top of its bearish structured daily profile at 59.90. That's a positive, suggests that we move higher. In the case of the NQ, it's been struggling at the top of its profile. It struggled yesterday, 21,535. Still the number to be watching there, but if we close above that, we head higher. Now, the NQ has got a buy the D point bottom pattern out there that formed with the bullish hammer candle back at those lows on January 13th. If we take a look at the Dow equity in the NQ, by the way, because I don't think maybe I can pull it up, but if you can do it yourself, if you take a look at the Eco 8 versus the just like the SPYs, the RSP versus the SPY, the Eco 8 is outperforming. What that tells us is that it is the heavier weighted positions that were holding the market down, or at least the NQ down. Once those things free up, it'd be a rally ho. So watch 21,535 inside the NQ. In the case of the Dow Equity Future contract, would have to go take a look at the weekly time frame to come up with some type of resistance. And finally, it's the Russell 2000. That's taking on the top of its profile as well. Top of its profile is at the 2285 level. If we close above that, it's signaling that we rally further. Now, in the case of the Russell 2000, this could be 5 consecutive days to the upside. That's a pretty big move out there. Typically, when you get above 4, consecutive days in one direction or the other. It tells you about what the future direction might be. In the case of the Russell 2000, though, when it made its top back here on November 25th, that was 6 consecutive sessions to the upside. So maybe it's got a 6th consecutive session before it begins to pull back, but it should be nearing a point in time when you see at least a 1 to 2 day pullback. We cannot say the same thing about the Dow Equity Future Contract. This would just be what's had 1 day to the downside at this stage here since that bottom. That's a sign of a strong bull market out there. You kind of get the message that how Stevie's reading these charts out here. If we take a look at the NQ out there, the NQ yesterday was also day 1 to the downside. The same thing for the ES Mini. So these charts are looking mighty strong at 11:11 in the morning out here. But let's go take a look at the intraday time period charts out there. Let's go see if we see some short-term topping signals. Let's start with that NQ. We start with the 5-hour time frame chart. What do we see out here? We see an A to B equals CD pattern to the upside that may be forming out there. If we take a look at that A to B point, we'll start here with its TD9 count bottom and run up to where it's got the letter C out there as part of the Chapman wave. If we copy and paste that, which we'll try to do, let's go ahead and move this up. I got to move the screen just a tad. We're going to open up the screen. That'll make it a little bit easier. That'll make it a lot easier on Stevie. So let's open up the screen. Let's pull this off to the left. Let's try to figure out where this might head to. Again, now this is a 5-hour time frame chart. It's a 2 p.m. bar that we're in right now. So it's going to matter where we close at 2 p.m. But if we do close the NQ, that is, above the trading session from 4 a.m., yesterday, that high being 21,567.25. If we close above that, and we're 21,590 right now, you'll have an A to B equals CD pattern that gives you a price projection of 22,044. Now, that B to C retracement there is much less than a 0.618 retracement level. So that says that we should do more than a 1-to-1. In fact, that says we should get back to its highs out here from back on the trading day of December the 16th out there. Now, I can probably pull it up. I can pull up those charts. The charts being the DAX. We're not going to do that right now, but you do know, I would assume you do know, that the DAX is at new all-time highs. It formed a new all-time high yesterday. It's at a new all-time high again today. We know about the direction of correlation between the NQ and the DAX, unless that somehow has disappeared. So that's a promising message that the NQ, in fact, we may get back to those all-time highs again. At a 240-minute time frame chart, I don't see any kind of a topping pattern out there. In fact, its bar completes at also a 2 p.m. bar that we're looking at that is trading in. How about the NQ? So the NQ, if you see the at 12 noon, if price is closing above the high of 21,567.25, 21,567.25. We're at 21,590. Then the 120-minute chart will go ahead and trigger that A to B equals CD pattern to the upside. When we look at a 10-minute chart, no topping pattern, none on the 15-minute chart, none on the 30-minute chart, although I probably can find a sell, the D point top out there. So what would that tell us? We got a shooting star that spike high this morning at 9 or 10 o'clock this morning inside the 60-minute time frame chart. So another level to be watching would be that 21,682.50 level. If price closes above that, we're headed higher inside the NQ. So we're about to head to a breakout there. We've only got a couple of requests that have come in, but let's get to those and we'll keep moving forward. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. I've got both my systems running. I wanted to test it out today just to see how fast or slow it could be. It's proven to be pretty slow out there. So problem is that I've got such good data on the e-signal charts as well that I want to be able to share. But right now, let's say we'll sludge our way through this. We're going to take a look at Carvana. This is for Dan inside the Tiger's Den, who was most interested really in the intraday charts out here. So let me see if I can change screens for you, Dan, if you give me a moment. I know that I can change them. If you just give me a moment, we'll get over there. We're going to take it for the intraday time period. Just see a bunch of other junk on the left. So here, with regard to a 30-minute time frame, what you should be able to see, that's the upper left screen out here, is prices trading below the bottom of profile support out there. That's at the 228.71 level, 228.71. So as long as price remains below that, it's a suggestion that we should move lower. Now we're in bar number 7. And what that suggests is that we could see a TD9 count bottom pattern formed there. See, this is bar 7, bar 8 at noon. 9. So by 1 o'clock, that's if Carvana moves lower, you could get a TD9 count bottom pattern. 130-minute time frame chart. Nothing there to report on that I see. TD9 count top on the 65-minute time frame chart, and prices testing a key level of support right now, and that's its oscillator and change line. That is currently printing, Dan, at the price of 226.65. So if price were to close below that, then that would signal a move back to likely profile support at 220.20 out there, and the 190. So of these 4 charts out here, the one I would be focusing on the most, I think, is a 65-minute. And the reason is because that actually gave us the top. Like, for example, a 30-minute negated his TD9 count top. Now, maybe there's a sell the D point, A to B equals CD. I'm not going to spend the time to go measure that at this moment in time, especially when we have a TD9 count top on the 65. So that's the one that I'd be paying attention to. Dan, if we switch back over, anyway, for those, you're welcome, most welcome there. If we If we move over back to the daily, weekly, and monthly, just for anybody that might be trading this, let me just cover that out here. So on a daily time frame, this is what I would say is in a bullish mode out there. You're trading above profile resistance. You've done it for more than 2 consecutive days out there. So and you traded to the upside for 4 consecutive days. So pull back for 1 or 2 sessions out here would just simply be normal. The resistance level, as we can see, would appear to be the weekly oscillator and change line at 237 and change. Right now it's 237.80 out there. The monthly time frame chart is at a sell the D point top out here. Don't know the answer. No, it is not. Not that I don't see an A to B equals CD there. So that's in full breakout mode. It's trading above profile, and it's trading above. That's interesting. How did I do that? There we go. And it's trading above its green oscillator and change line. So that's the overview for Carvana out there. Let's go take a look at Alibaba for Lars inside the Tiger's Den. BABA is its ticker symbol. We take a look at this. This formed a Rhodes Momentum Indicator bottom pattern on the trading day of November the 14th out there. It was that gap to the upside. We have another gap to the upside today. Price running into resistance at 85.32 out here. So that's really your first battleground. Just getting up to resistance doesn't mean it's a top or anything like that. It's just your first battleground. If you can get above 85.32, then your next battleground would be at 87.10 and one at 88.88. On a weekly chart, that is, things don't really look that good. It looks like, if anything, maybe it's just in counter trend rally mode out there because last week it negated its TD9 count bottom pattern. It really suggests that Alibaba's intentions on a weekly basis are to make its move to 72.95. On a monthly time frame, price is trading with inside profile. It has a buy zone between 73.31 and 78.25 out there. So that would be a beautiful move. If, in fact, Alibaba could get back down there between the weekly breakout level at 72.95, a buy zone on that monthly profile, that would be ideal. But right now, you've got a daily bottom. This is only going to be day number 2 from a rally to the upside out there. But you're just dealing with resistance at this moment in time out there for Alibaba. So I hope that helps you out, Lars, and thanks for your request. Jambalaya wanted to take a look at DVN out here, so let's pull up that chart. That Devon Energy might be. Here's what we do know. Let's actually spread out the daily time frame. And I think you had written in something. What was your question? You want to take a look at TLT as well as the DVN. So we're going to do that. With regard to the DVN, this has a negated TD9 count bottom. It did that immediately on the trading day of January 10th. It's continued moving higher. This is just simply after 6-7 consecutive sessions to the upside. It's finally going to take a little bit of a breather out there. Yesterday was a slight breather. It was just a lower high, so 6 consecutive sessions correctly. Maybe this is just simply going to be a 2-bar move, 2-bar knee-jerk reaction to the downside out there. I don't have any support. Support would be down to 35.30, but just simply knowing the cadence, knowing the tempo of how markets respond out there, I mean, that provides you and I with an added edge. That's why I put those on these charts, why it actually takes a bit of time when I put in a symbol for it to calculate everything. First, there's a lot of calculations going on, but adding that to the system, I used to have it on a different chart. Occasionally I pull it over. I like having this out there. It really provides you and I with a ton of information out there. If we look at the weekly chart, Jam, you can see that price is running into the area where a counter trend rally would end. We did have 2 consecutive weeks below the bullish structured profile. So what you're really looking for, does it have to be today? You'd like it to be today, is a close above 37.87 out there. We're at 37.80. If you close above 37.87, then you're off to the races up to the 39.74 level. If you don't, and this is week number 4 of the upside, then maybe we are going to pull back on the daily time frame and get back towards that 35.29 level out there. But, and even if we close above that resistance level, because it's been 4 consecutive weeks to the upside. Just as careful on that. That's all. Monthly time frame, I don't have much out here. Daily looks really beautiful. The weekly looks good too, and it would look better if you can close above the center of that profile. So I hope that helps you out, Jambalaya. Thanks so much for your request. With regard to your question about TLT, I wasn't able to get the TLT squeezed in time, but what I did do is went over and took a look at the 30-year Treasury. And that's what I really want to look at. What I don't know is your time frame out there. So you're saying give my perspective on the 20-year. So we're looking at the 30-year out here. Now, on this set of screens, I don't have the consecutive days of the upside, but we can count them. We can see it's been 3 at this stage. I'm going to open up the daily time frame chart. see what other type of information we might be able to glean. So there's an A to B equals CD pattern to the downside. It hasn't attained that price projection level. But what we do have is yesterday price closed above the top of its profile jam. That is at the price point of 112.26. And we are trading above that today. 2 closes above a resistance level tells us about a character change in trend out there. So you do have a change in trend. 3 days the upside. It suggests a further rally is likely. Let's go take a look at the intraday charts. The longest term time frame chart I've got on this set of screens here is daily. There is nothing bearish on the weekly time frame chart. You're trading above profile resistance and a green oscillator and change line. In the case of the 240-minute chart, still no topping signal. You could get a bearish engulfing candle by, I would assume this is 2 p.m. By 2 p.m. out there. So be careful. Now in the 2-hour time frame chart, we do have a confirmed Rhodes momentum indicator top, and you're trading back inside its profile. So the next levels of support to the downside on this time frame are 112.29 and 112.22. Same thing on the 60-minute, being a Rhodes momentum indicator top, and prices trading below profile here. Same, nope, not the case. You've actually got a TD9 count bottom on the 10-minute time frame chart. So if we just simply say this here, a close below 113.02 on a 10-minute basis, you're likely to head lower. Where are we trading right now? 113.02. Doesn't matter at 11:26. It matters at 11:30. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. I mentioned there's lots of good information on the black background charts. It was especially pertinent for today, which is why I kept both systems operating out here. And as an example of one of those charts, and this is the New York Stock Exchange, the Advanced Decline Oscillator. That is panel number 3. So panel number 1 is price, obviously. That's the New York Stock Exchange. Panel number 2 is the Advanced Decline line. That Advanced Decline line made its all-time high at this stage here. I believe it was right around December the 2nd out there. Now, the advanced decline line, in order to calculate the oscillator, we're using the advanced decline line. We're using the difference between the 19 and the 39 period exponential moving average of that data out there. And we can see that we've gone from extreme oversold. Remember when we were in that extreme oversold condition? This was back in the middle of December. And, of course, at that stage, everybody thought that things were just simply headed south. But if you were using this indicator, you would know, wait a minute here, you push the ball down about as far as it can go. It can go a little bit further, but we had pushed that ball down to as far as it could go, and it needed to work off that condition out there. Now what we have is a condition where price is above the plus 150 level. The current reading of the advanced decline oscillator is 183.50. I don't know where it's going to be at day's end. Today, it's 11:32 in the morning right now. If this was 4 p.m., what I would tell you is higher prices coming. It doesn't mean higher prices coming on Monday, especially with the market being closed, or Tuesday. It says higher prices coming. It is rare to find an example of a advanced decline oscillator that closes above the plus 150 level and doesn't eventually get to higher price again. So whatever today's high is, and that's really what I'm referring to, is that what this, and if it closes above the plus 150 level, it's telling you to expect higher price. Again, it doesn't mean the next 2 days or what have you, but you go back, you can put this indicator on your tools. You should be able to do that out there. And if you go back and you check it out, you're going to say, you know what, Stevie's right. If you get above, you close above plus 150, it tells you about higher price out there. Now, we take a look at the Spot VIX Index. Spot VIX Index right now is trading back below its 50-day exponential moving average. We are trading just below yesterday's low out there. That's bullish for the S&P 500. And odds would favor now. We got that initiation signal to higher price a couple days ago. We talked about that. Odds would favor that what the Spot VIX Index may be doing is targeting its lower Bollinger Band. The lower Bollinger Band right now, that reading is at 1331. This is a 50 to 1 reading out there, so change it. I think it's usually a 20 and then a 2 standard deviation out there. If you wanted to have the same stock chart that I'm looking at, you would be using the 50 to 1 level out there, and that seems like a likely outcome for price to make its way down there. If we take a look at where we're trading in relationship to perigee, that came in I think earlier in the week. Might have been. We are clearly above the perigee pivot point for the ES Mini, the same for the NQ, the same for the Dow. So all is looking good with regard to the equity future contracts out here. We're also above it for the U.S. dollar index. As well, really, we're above for light sweet crude, pretty much just about everything out there. So all those indicators are very strong. I had mentioned that the DAX was traded a new all-time high. The DAX is this bottom screen. I'll just simply open it up so we're all looking at the exact same thing. Whenever an instrument trades above the prior year's high out there, it just simply gets bullish. Now, I point this out to you because I know about the bearishness that is inside the tiger's den. And you know that there's a strong correlation, certainly directional correlation, between the DAX and the NASDAQ out there. And so this is telling us that this thing wants higher prices. This is in a bullish breakout mode. I'll have to do some more work on the DAX over the weekend out there to take a look at this. But you've also got the FTSE in the UK that is a new all-time high today. Let's take a look at that chart. Where is the FTSE out here? FTSE's in the lower left. 84.74.41 was the old all-time high. We're trading at 85.07.91 right now. And these markets close, when do they close? I guess maybe it's 12:30, not 11:30 out there. Anyways, those two instruments are trading at new all-time highs. Here's what I will share with you. Here's one conclusion that I can guarantee you, as close as I can guarantee you anything, the U.S. market is not even topped out. That's the most important message coming from the FTSE and the DAX right now. The way that the U.S. markets top, it is not top first with the in the UK or the DAX, the FTSE or it has not worked that way. They all top really at about the same point in time here. So that suggests that we're going to see new all-time highs inside of the Dow. Doesn't mean it's this week or next week or what have you. But everything that we are looking at here, well, I just suggest they are things to really pay attention to out there. If we take a look at where we're trading in relationship to the day after the election out there, back inside the Dow, we're back above that level, which was 42,850. So that's a bullish signal. So I'm seeing even bullish signals there as well. So I don't think there's anything else on this set of charts that I need to share with you. I've shared with you what I think are the most important elements, and you use that information for your advantage. The first recall, I wanted to get back to the TLT for Jambalaya. I was able to now get that back up on the screen. He asked about it. I should provide that. And here, if we take a look at the TLT, one of the things I was noticing, there's a couple different A to B equals CD patterns. I'm looking at the weekly chart out here for us. So if you give me a moment, we're going to open it up. So there's really only one A to B equals CD pattern. So now that we've opened it up, let's go ahead and draw that in here. So the A point is going to be this high from September 20th. The B point is going to be the low from November 22nd out there. And I'm just simply going to grab that and move that over to the C point out there. You can see that. Did we make a one-to-one move? We did not. So even though you see a weekly bullish bull sash candle out there, that's not the indication of any kind of a bottom that I see out here. However, Stevie may have to take that back. So let's get rid of this out here because that's just noise at this moment. However, and here's the however, price is testing and rejecting its swing point from October 7th. So in honor of OB1 out here, he would say, as long as on light volume, the TLT had volume of 259 million shares. That was back on October 27, 2023, 259 million shares. For less than 259 million shares, then you've got a test and rejection on lighter volume. Where are we at so far this week? 163. So you're going to get the Tom O'Brien test and rejection as long as the TLT closes above the high of 85.35. What's that say, Jambalaya? That says if you can't bust them to the downside, you try to bust them to the upside. Now, the bust them to the upside says you trade up to resistance, at least in Stevie's mind, and that's at 89.25. That's coming from your weekly time frame chart for the TLT out there. And the daily is trading above profile resistance. It closed above it yesterday, traded above it today. That's good. The weekly found support at its bullish structured profile. So the answer to your question with regard to the 30-year and the TLT and what they're doing, it looks to me like they're headed higher. 89.25 is the price target for TLT. We come back from this break. We're going to look at ticker symbol TSSI. We're going to look at Apple. We're going to look at natural gas for Joe and anything else that has been requested. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kickstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kickstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at TSSI. This is for Do It Inside the Tiger's Den. On a daily basis, what I see out here, Do It is a consolidation between profile support at 1112. It's a slightly bullish structured profile that centers at 1225. We're trading at 1265. It closes above 1225. Increases your odds that price will make a move up to the top of that profile at 1412. If we look at the weekly time frame chart, last week triggered a Rhodes momentum indicator top, while at the same time testing rejecting its green oscillator and change line. We've done that for a second week out there. So the work to the downside may be over. At a minimum, the signal on the weekly time frame is neutral. Daily time frame is saying I want to move higher. Monthly time frame is saying I want to move higher as well. This has been a series of higher lows out there as well, and that continues. Its TD9 count top would be negated at the end of the month if price were to close above, and this is came in back in November of 2024, 12.99 out there. So at this stage here, charts look like they want to at least rally towards that 14.12 level. Dude, I hope that helps you out, and as always, thanks for your request. Nicholas wanted to take a look at Apple. So let's get those charts fired up on our screen here. And Apple yesterday negated a TD9 count bottom pattern. Somebody had asked me about Apple yesterday. I'd mentioned that we were long Apple. That was while price was testing that support of 231.48, and then it just simply negated that signal. It did with volume. It took out that swing point that had volume of 49 million shares. It took it out with 71 million shares. Kind of hoping that we get a little bit more rally than this inside the NASDAQ, so we could try to exit this position. As long as it remains below 231.48, that's the bottom of its profile. Then you've got a signal that says that we head lower. Quite frankly, that's what we're seeing on the weekly time frame. We're also potentially getting that message on the monthly time frame out there. If price could close back above 231.48, and I think this is what Nicholas was asking, if price were to do that, then the break of support, not the TD9 count bottom, closing it below the TD9 count bottom negates that bottom signal, period. But if it can get back inside of profile, that could be considered a false breakdown. As long as it remains below 231.48 at day's end, well, then we're likely headed lower. At least that's the message of the weekly. And at this stage here, the monthly is trading below that green oscillator and change line. That could change by month's end, but it's hard for me to forecast where it's going to be at month end. So, Nicholas, I hope that helps you out. Joe was interested in natural gas. I think the question was, if I'm not mistaken, how low will natural gas go? I might have misinterpreted that. But here, if we take a look at natural gas, what do we know? We know it has a sell the D point top. That went ahead and formed. Actually, and today, quite frankly, if you get a bearish engulfing candle, then you'd have a Rhodes momentum indicator top. So sell the D point top, the resistance level was at 4.201. But if you get a bearish engulfing candle today, it's going to move that resistance line up to the high of yesterday, which would be $4.328 out there. Okay, now here's the positive on the daily chart, daily side. Prices, price above the green oscillator and change line by a smidgen, above the top of its profile by a smidgen, so 395. So as bearish as Stevie made the daily chart sound like, it's really neutral. It doesn't get neutral if it closes below the bottom of that, the top of that profile out there. Then you can say that price should likely pull back to 374. Now, 374 would be the area where a counter trend move would come to an end. Look, this is the natural. This contract rolls over to March next week out there. So I don't know if you're using this for the UNG or what, or just trying to understand. Joe, about natural gas. Natural gas on a 5-hour chart is at support. It's breakout level. Another key area to watch, $3.96. You've closed below that, we're likely headed lower. 4-hour chart is trading below profile support. Says be careful. Same as 120-minute chart. 120-minute chart says if we break $3.96, let's call it $3.95 out there, we head to 3.859, the 2-hour TD9 count breakout level. I don't see any kind of bottom signals out here at all. In fact, the 30-minute negated its TD9 count bottom out there. So that's what's going on with natural gas. Those are the levels to be looking at out there. And, Joe, I hope that provided you with the information you were looking for. There was a request to take a look at IBRX. Now, I don't remember if I got that in on the no, it wasn't Disney, so I don't. Oh, I did get it. How about that? So now we take a look at IBRX out there. You've got a profile change in trend that is basically going to form today. We closed above profile resistance yesterday. We are above it today. We're headed higher. I see wave number 7 on a weekly time frame. I also see a completed by the D point pattern. That's the better one of the two. Why? Because you have to see a higher low next week to confirm that weekly by the wave number 7 pattern. So you've got to buy the D point pattern on the weekly time frame, and with price running right up into resistance, the first level of resistance is the top of its profile, and I think this came in from Dan, if I'm not mistaken. That's at $3.30, and we're trading at $3.13. The high so far for the week has been $3.30. Makes sense. That's resistance. 341 is another resistance level out there. That's really the level that price would need to close above on a weekly basis to say that we've got traction here. On the monthly time frame, let's see what kind of signals might be out there. If anything, you're trading below profile support. So all the heavy lifting right now is being done by the daily time frame. It can't do anything until the weekly takes out that 341 level. I'm just scanning my other charts. And I'll pull this one over now. This is a 30-minute time frame chart, so this would be one for you to pay attention to. From an intraday perspective, a TD9 count top exists. Price right now, where's that oscillator and change line? Okay, I don't know where it is. I'm not going to waste the time right now to put that on there, with price being above profile resistance. As long as it remains above 303, that's a bullish to neutral type signal out there. If price were to get below 303, you'll likely move to 281 to 275. So this is the only intraday top that I see out here in IBRX to be paying attention to. So I hope that review was sufficient. Let's go take a look at the next request that came out here. It was for Costco. COST is the ticker symbol. Did Stevie's get that in on time? He did not. So we're going to move back to my set of charts. That are just three, just these three, which is what you see. These will populate a little bit quicker for us. So let's put up COST out here and see where that is going to. We also are going to look at Fannie Mae for VIC, and maybe we'll get a chance to put up the energy sector, the XO. Well, we got DoorDash, so we got to put that up there. So hopefully we can get to that. Now, I take a look at Costco on a daily time frame. What I see is prices trade above its oscillator and change line, as well as the top of its profile. Costco hasn't been above that line since December the 11th out there. So closing above that today is going to suggest that Costco rallies further. The weekly chart is at support, which was 923.70. So support is held there. Support is held on the A monthly time frame. The monthly time frame negated its TD9 count top. It does not have a top out there, 902.55. So Costco is going to rally further out there. Its next level of resistance, 965 to 972 on a rally to the upside. Fannie Mae, FNMA. Let's get that up on our chart here. Now, there's only about 15 seconds before we start hearing the sound of music out there. And that sound of music will be saying that we're going to a break. But I will have Fannie Mae set up. Here's the daily time frame. Daily time frame, Rhodes momentum indicator top form 2 days ago. Price found support. That was at its oscillator and change line. You're trading with inside its profile. Your next resistance level is 671. Your real resistance is the high of yesterday. The weekly chart looks beautiful. No topping signal. The same can be said about the monthly time frame chart as well. And that's Fannie Mae. So Fannie Mae should at least rally to 671 and above that. Basically back to yesterday's high. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Ticker symbol DASH. I think this is DoorDash. Trading into a swing point from back on January 7th at 2.6 million shares. In a couple hours of trading, you're at 1 million shares. So you're pushing that swing point with volume, with price above its green oscillator and change line and top of the profile. That's the high that it's gunning for. Maybe it's going to take that out as well, but it should at least get up to 175.99. Above that, you would have resistance around 177.28. That's the oscillator and change line on the weekly time frame. This negated it is TD9 count. Top is just consolidating, if you will, with inside profile. The real level of resistance out here is a monthly TD9 count breakdown level at 185.28. That is DoorDash. I had a request to take a look at AMD. We take a look at AMD. Formed a Rhodes momentum indicator bottom at the beginning of the week out here on January the 13th. It's now inside its profiles. 125.11 is a battleground. 129.44. This is a slightly bearish structured profile, so your battleground is between that area, 125 and 129. On a monthly time frame out here, you'd sure love to monthly. On a weekly time frame, you'd sure love to see this close the day back above 120.97. If you do that, it says last week may have been a false break to the downside. Monthly is likely to form a TD9 count bottom at month's end. It'll complete that pattern next month out there. The energy sector, XLE. On a daily time frame, we're in bar number 7 of a TD9 count. This thing has been on a roar to the upside. Likely next price target or battle is going to be at 95.21. That is the top of the weekly profile. That's also about where the monthly oscillator and change line is. And then lastly, let's see if we can get this up here for Brent in Martinez, California. And the question is, has Val has this bottomed out here, so hopefully the daily chart here we'll stay on through the music through these next 20 seconds. Yes, Brent, you have a TD9 count bottom that formed 5 days ago. You are now trading above 896. 896 was the TD9 count breakdown resistance on the daily time frame. On a weekly time frame, you're trading above its oscillator and change line. So VALE has bottomed and is likely to rally further. Folks, thanks so much for being here all week. Have a fabulous weekend. I'll look forward to seeing you on Tuesday. Don't forget the markets are closed on Monday. Take care. See you soon.